Alex, welcome to Questioning the Manager. So let's start with China, where a portion of the portfolio is invested. Bit of turmoil there recently. How are you finding it there?
Yeah, the market's rallied a long way from its lows sort of last year in 2014. So we need to remember how far we've come. So you're seeing some of that speculative sort of froth come out of the market. It does seem to be related to some of the very highly speculative technology and biotech companies. But I think the core holdings that we've got in bankers are very domestically orientated. They're real businesses with real profits, and they're actually not falling as much as the market. But we will continue to see, I think, a little bit more weakness before prices, I think, fall to a level which will attract more international buyers and domestic buyers back into the market. But generally, the economy is still in a good place in my mind, so I'm still quite positive on the medium term for China.
Now, the dollar has been notably strong. Is this affecting any of the dividends the portfolio is receiving?
Yeah, generally a strengthening dollar is good news for Bank of Investment Trust. About a quarter of our income, our annual income, is declared in US dollars. So that strengthening produces a higher level of income in sterling that we can distribute to investors. If we look at our assets, actually slightly more than 25% are in dollar assets. So whether that's a commodity play in oil or actually in US markets. So again, that helps on the capital front as well as income. So generally it's good news.
So a new gearing facility was arranged quite recently at a relatively cheaper level of borrowing. Do you find this is positively affecting the dividend you're able to pay out?
I think it will in time. We've raised 50 million sterling of new assets at 3.68%, so a much lower rate than our existing debentures. Now, one of those debentures will retire at the end of next year, 2016, so that will improve the income front a little bit when that occurs. In the shorter term, we need to just find good investments with a yield around about 3.6, 3.8%. And I think that we should be able to find good companies at that level and growing dividends. So in time, yes, definitely, it'll help the income front. It'll produce higher levels of both income and growth in that income. But really, it's going to be staggered over the next 2 or 3 years.
Okay, finally, Alex, let's talk about the UK and rate rises, which seem to be happening this year. It seems a bit more hawkish from the BOE. So will your allocation to the UK be moving up or down on the back of this?
And we have gently been reducing the exposure to UK companies over the last 2 or 3 years, and I think we will probably continue to do that into around about 30 to 40% level. We quite like domestic UK economy as a whole. It seems well underpinned. Employment keeps rising, so more people in employment is going to be good news for the economy, for the growth of the economy. So I'm not too bearish on the UK, and I think interest rates may have to go up, but they'll go from such a low level to maybe 1 or 2%, that it shouldn't affect largely the economy. So I think we're positioned reasonably well for that event. Again, we may well be the Bank of England are talking up rates more than wanting to actually physically do that. So we'll have to wait and see.
Alex Crooke, thank you.